It's just another rainy Friday. Oh, I wish it was a green day because we'd make more money. Oh, expiration Friday here at Friday, May 12th, 20 and the 23, 10 a.m. on the Swatch Watch Central Standard Time here in the rainy, little drizzly farm fields of Valparaiso, Indiana, looking at the watch list over on finance.yahoo.com. We got SPY down just a little couple clicks, about 54 cents. CVS, come on, baby. Get up there. I got 10 put. I sold 10. What was it? It was a training wheel on CVS that started as a training wheel with $70 short leg. I sold off the long leg for dollar bills, but I still have that $70 put out there expiring next week. There's 10 of them, so there's $70,000 up for grabs, and currently CVS is just not cooperating. So I'll need some help there from CVS. Home Depot doing good. We've got a training wheel on that expiring today. Tyson Foods still giving me the bitter beer face. I need that to be 50 and above 50 right there. What else we got going on here? The Tesla in the green today. Elon, I have decided to name a CEO for Twitter. So Tesla responding a little bit in the green because of his announcement. Amazon had a nice run, didn't it? Down a little bit today. Google's just rocking out with its you know what out. Google. Caterpillar is cooperating because we do have a training wheel on that expiring today. Love expiring. I mean, Love is cooperating for our covered calls, but not as a asset. Walgreens, this putting pressure on my training wheel. I got a 31 short leg on the training wheel, and it's at 3106. Boom, boom, boom. So we'll be keeping an eye on that. Walmart doing good for us. Johnson and Johnson, we've got a covered call to roll. Costco, we got a training wheel expiring next week, so that's doing well for us because I think we're at like 475 on that short leg of the training wheel. I call it the training wheel. If you're just tuning in for the first time ever, you've heard of the wheel strategy when it comes to options. You begin by selling cash secured puts on a company, hopefully that you would like to or wouldn't mind owning, like a Costco, a great company like Costco. And if you are assigned, then you simply turn around and sell covered calls until those shares are signed and taken away, and you start all over again selling the cash secured puts. And if you picture that, it's just a wheel spinning. The wheels on the options go round and round, round and round. Well, the training wheel is an idea that spawned from my friend Brian Smith, who basically said, "Hey, why aren't you doing more credit spreads to keep more dollar bills collecting that sweet interest paid over on the Robinhood?" It's currently at 4.65% because, on a spread, on a credit spread, you have way less collateral that is necessary to make the trade. And then you can always sell to close that long leg at a profit if your trade gets in trouble, and then roll out the short legs. I'm like, hey, that sounds like the training wheel. That's like putting on training wheels on a bicycle before you learn to ride it. So I like the philosophy of the training wheel, and I'm in the middle of a couple in various stages of trades right now with the training wheel. One of those happens to be Costco. So, and another one is the CVS, which I've taken the training wheels off, profited from selling to close the long leg, but now the short leg is under pressure. But that's okay because we could always roll it. We could take assignment as you would do in a normal wheel scenario and continue to collect the premium. And then hopefully with a company like CVS, the dividends as well. So looking through the board here, Coca-Cola at 63.74. So we have a $63 covered call to roll today. Verizon, I think we have our covered calls expiring next Friday. So those are at 38 or 38.50. So those are doing fine. Then we have a bunch of Intels at 29. So they're a bit under pressure. I don't know. I might let if Intel is taken away from me, so be it. Of course, they were chopping broccoli on that dividend, chop that down. I still believe in Intel long term, but I don't necessarily believe in the market in the long term. Short long term, meaning from now to the rest of the year, because of these signs of doom and gloom with regard to recession. Doom and gloom isn't the words that we should use here, but a lot would. But I definitely don't see a great deal of upcoming sunshine in the market. We could have some rejoice at the next Fed meeting if they don't raise the rates, which they, at this point, statistically unlikely that they will raise them. Bank of America, we got 2850s expiring today. We do want to hold on to those Bank of Americas because we think they're undervalued right now. But in the short, long term, rest of the year, they're probably not going to do much. So that's a look at that to begin things off today. AT&T, I should have sold some puts when it was under 17 because I don't mind owning AT&T. I also don't mind if they're taken away from me either. I think we have 1850 puts on those. I mean, calls, covered calls. So that's what we got going on to begin the day. I'm going to end this video just because I want to have a very dedicated video to Qualcomm, which Qualcomm, here's the message I'll show you, and I'll show it again at the next beginning of the next video. So last night at 11:02 p.m. Hey, I'm asleep. I'm asleep at 11:02. The lady or gentleman on the other side of my 110 strike puts, 2 contracts that were expiring today. My plan was to either, take assignment at 110 or to roll them. Brian was certainly making a great case for rolling them, roll those puts and wear them puts out. He likes to say, and I like that plan a lot. Well, I didn't have the option, no pun intended, because they were assigned to me at the 110, got assigned early last night, which was May 11th. So now I own $22,000 worth of Qualcomm, where I paid $22,000 worth of Qualcomm, and it's worth about, carry the one, less than 20,800. So I'm a little behind the 8 ball right now on the trade of that. But what I want to do, I've created or started to create a very simple spreadsheet because I'm going to track both of the positions that I have in Qualcomm. So here is the 110 strike. So we sold puts. And again, I wanted to do this in a separate video. So that's what I'll do. So that is a preview of the next video. We're going to walk through what's gone on with regard to Qualcomm, my 2 different positions. And my plan is to roll the 109s. I've got 3 109s that I want to roll today before they're assigned early. And then we'll be tracking the premiums, dividends collected over here on the stocks that I do own now, because here we have the 200 shares that I paid $22,000 for, currently worth $20,800. Actually, it's a tick under that now because Qualcomm I thought would be in the green today, but it's in the red. It's in the red by 38 cents. So we'll be walking through that just to get my feelings and thoughts on the Qualcomm and the trade that essentially has gone awry. But it's like I'm actually excited about it because you're a sicko, right? You're a masochist. No, I just think that long-term Qualcomm's just fine. So if you even if I'm holding bag on it, I can be selling those covered calls and collecting dividends. And unless the market tanks or Qualcomm goes belly up, long term we're going to be just fine. And I think even shorter term we're going to be just fine. So I'm going to walk through that scenario in the next video. We'll do that in the next video. Thanks for tuning in here. 10:09 a.m. today on Expiration Friday, May 12th, 2023. Subscribe, like, comment, and I'll see you in the next video.